Hi guys, it's Stock Curry, and today we're going to talk about whether a crypto winter has started, and if so, how long will it last? Though I also want to talk about some of the moves that I made today in my cryptocurrencies. I'm also going to talk about why the stock market was down today, and then finally I've got some channel updates for you guys. So, the first thing is a crypto winter. First of all, what is a crypto winter? Well, a crypto winter is basically referring to that period from 2018 through about 2020 where nobody was really talking about cryptos. Bitcoin specifically went from 19,000 all the way down to 3,000 in about 1 year, had a major sell-off, and then it just went flat for like 2 years. And it wasn't in the media, nobody was talking about it, nobody was buying it. It was a really dark time in cryptocurrency trading and investing, and it's called the crypto winter. And it looks like we may have started another crypto winter. This one running possibly, if it does last, say, a year, going all the way into the summer of 2022. And then who knows how long it'll be while media stops talking about cryptocurrencies and people stop buying it, where cryptos just lay flat for a few years. And so there's some good things and some bad things. First of all, why did we have this major sell-off today, this huge crash in the markets? The reason is, first of all, it all started a few days ago with Elon Musk basically doing a reverse on Bitcoin and cryptos in general. And then we had this critical support level of 42,000. It broke below the critical support level of 42,000, started dropping. Actually, Bitcoin dropped below 40,000. I talked about that in yesterday's video. Then, while I was sleeping away, trying to get rest because I was up late the night before, China decided to come out and say, hey, we're banning all cryptocurrency. The only one you're allowed to use is our official one. And that sent everything crashing. Then on top of that, you have the fact that a lot of hedge funds and large institutions are leveraged on their crypto assets, some as much as 100 times. Can you imagine that? Can you imagine like putting $1,000 into your broker and your broker's like, all right, here's $1 million to play with? Like, it's insane, the leverage. And so what ended up happening is when Bitcoin and really every crypto started coming down, these people that were leveraged insane amounts, they were losing a ton of money. And so what do we have? $500 billion of value just wiped out of Bitcoin in the last few days? Like, it's been crazy. And so all of that everything combined, Elon Musk, and then the break below support, and then China coming out saying they're banning cryptos, and then the funds that were over leveraged, and it just sent Bitcoin down. Bitcoin bottomed out at 30,000. Ethereum bottomed out at like 1,800. I mean, it was wild. Dogecoin is down to 19 cents. Huge crash. And then what happens is the institutions, the investors, the people that were not highly leveraged and they were just sitting on the sidelines, they're looking at this like, wow, Bitcoin's at 30,000, Ethereum's at 1,800, Doge is at 19 cents. This is a huge chance to buy. And so they ended up buying. So what happens is the chart kind of does this and then it pops back up as you get all this buying. Well, look, I've seen this happen time and time again in a number of different assets throughout decades of trading. And this is what happens every time. The chart goes like this. It starts coming down. You get this huge crash. It bounces up back to about the support level or basically what a downward trend line would be. And then it starts slowly coming back down. And it might take a few days, a few weeks, a few months to get back down to 30,000 on Bitcoin, say, or 1,800 on Ethereum. But eventually it gets there. And then it just keeps on going. And so this is what I have seen in my experience, which is why I do believe this is the start of a much longer and more prolonged sell-off in cryptocurrencies overall. And so because of that, the other thing is I could be wrong, right? I don't know. I can't foresee the future. And so there's very possible that, you know, we have our downward trend line, we came down, we bounce, and when we hit this, we just keep going up. That's possible, right? It could happen. And so what I did is I didn't necessarily sell my crypto today. What I did is I moved it. And what I have noticed over my years of investing is that the assets that are the most speculative are the ones that get hit the hardest. And so what I did is I pulled my money out of Doge and I moved it into Cardano. So I'm out of DOGE and I'm into ADA. And that's why I did it. I made the move because I was trying to pull my money out of a highly speculative asset and put it into a much less speculative asset. And so that's what happened. That's why I made that move today. I did pull out of Bitcoin and put it into Tezos, but in hindsight, that was a mistake. I should have just left it in Bitcoin. Anyway, whatever. I make mistakes. There you go. And so that's what happened with the cryptocurrency markets. As far as how long this whole thing could last, we could have a very gradual general sell-off over the next year, say into summer 2022, and then, like I said, people stop talking about it, and it could be 23, 2024, 2025 before we start getting another run-up again. Who knows? So just be prepared. It could happen. I could be wrong. Everything could turn around and go back up. I don't know. Because I'm not certain. I left my money in crypto. I haven't pulled it out yet. But I did move it into a more stable coin and less speculative asset. All right, as far as the stock market is concerned, the reason that went down today is because we had two things come out today. We had the retail report, which I thought would be bad, but more importantly, we had the Fed minutes come out. And the Fed minutes basically said, yeah, we see that the economy is rebounding faster or better than we expected, and so we're thinking about raising interest rates a little bit sooner than we had originally planned. And that just sent everything crashing down. It was terrible. I mean, rising interest rates are exactly what crashed the entire high growth stocks to begin with. Because the bond market will start selling off. That affects the stock market. It's bad. Rising interest rates are not good for the stock market. And high inflation isn't good either. So it's bad. And so the problem is right now we're stuck with either higher inflation or higher interest rates, and both are bad. And so that's why I see this prolonged correction in the stock market until we can get some clarity here and some sort of bottom, either peak inflation or rising interest rates or something. I need something to kind of give us some support in the stock market, and we just don't have that right now. And so that's why last week I bought some QQQ puts, some SPY puts, I bought UVXY, and I ended up selling all of it today. I got about a 50% profit off of that in about 3 days. Great hedge for my account. I'm actually up 14% in the last 3 days because of those hedges. It wasn't because of anything else. It's just the hedges that really help, bring my account up. So that's what's happening in the stock market. I think we'll probably get a little bit of a rebound Thursday and Friday, maybe. But we're still in a correction. It's not over. It's going to last for another month or so, maybe another 2 or 3 months. So just be prepared. We're in the middle of a correction. This is just what it is. It sucks that we have the stock market correcting at the same time the crypto market is crashing. But then the question is, if all the money is being pulled out of the stock market and the crypto market, where's it going? And the answer, I think, honestly, is gold. I know we haven't talked about gold in like 12 years, but you got to remember back in 2008 when the financial crisis was happening and everybody's panicking and freaking out, gold shot up. It skyrocketed. It was up like 50% in a really short period of time. So don't write off gold. You can make a lot of money on gold. Especially if we end up with this high inflation and money's pulling out of cryptos and money's pulling out of the stock market, it's going to go into gold. So just keep gold on your radar, okay? I am invested in gold. I'm up about 4% on it just from last week. And I think it's going to keep going higher. I really do. All right. The other thing real fast is some channel updates. So I have been given the opportunity to do some paid promotional sponsored content. Here's the thing. I have had a ton of requests to do sponsored content and I've always turned them all down. And the reason is because 99% of the people that reach out to me, they're complete crap companies. They're companies that are probably about to go bankrupt. They just want to like pump their stock up so they can do a share offering. I'm not going to touch those. No, absolutely not. Would never do that to you guys. I am not going to profit at your loss. Never, ever, will not happen. All of that said, I did get the opportunity. I just got off the phone with a company, and basically what they do is they go out, they find really potentially successful companies, and they help give those companies some exposure either through launch of an IPO or whatever it is. Maybe there's a direct offering coming out, or just whatever is going on. They're trying to give companies exposure, but they already go through and they do all of the weeding out to find companies that are actually good. And so this company, they actually brought High Blockchain public. That's HVBTF. And so what I love about that is, think about it. I mean, High Blockchain was the most profitable mining operation in 2020, beating out Mara, Riot, all of them. They were the most profitable. And so, a lot of YouTubers talked about HVBTF, but they started talking about it a few months ago. And heck, if I had been working with this company and I had a YouTube channel, we could have been talking about this in early 2020. And so this really could potentially provide an opportunity to get some great companies in front of you guys early on, before anybody's talking about it, before the share price runs up, and give you a chance to make a lot of money. And so there's a possibility that might happen. I'm not saying I'm going to do it. I'm saying there's that possibility. And so if there's some company that I probably would have talked about anyway, I just figure, why not get paid for it, right? And so I'm only going to do it if I'm able to present a company that I honestly believe could run up, and I honestly believe could help you guys out. If I can't, I'm not going to do it. And I'm also, even if there are like a ton of opportunities, I'm not going to bombard the channel, okay? I'm talking probably 2 a month max. The other thing is, I will never take away from what I'm doing right now. The videos that I put out every morning will remain. They'll be the same. Nothing would ever change there. These would just be additional videos that I might upload, like I said, maybe twice a month, once or twice a month. So what I really want to know from you is, what are your thoughts on me presenting companies to you that I really believe in and getting paid to do so? Let me know in the comments below. Again, it would only be about 1 or twice a month. I would never take away from anything I'm already doing. This would just be in addition to. And let me know in the comments below what you think, guys. Think about that, what your thoughts are on doing a few promotional or sponsored videos on this channel. All right, guys. Let's get into today's stock and crypto picks. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. I give you both the cliff notes from the top 10 YouTubers as well as my analysis on their stock picks. If anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, click the bell icon, and then click all so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Okay, before we get into today's stock and crypto picks, I just want to remind everyone that I am not a financial advisor, and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $1,850, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $1,850. All right, let's get into today's stock and crypto picks. Okay, I really would not call Bitcoin a pick. I just wanted to use it to show you guys kind of what's been going on as far as this crash that we had today. So first of all, you can see how Elon Musk kind of brought everything down, and we got down to around this $42,000 support level. And then it broke through, and that's where we started this crash. And then China came out and they said they were banning all cryptocurrencies. And then margin calls started happening. And by the time it was all said and done, Bitcoin was down to $29,558. At that point, it started coming back up. Now, we are continuing to see a little bit of a rebound, and I would not be surprised to see us get back up to the $42,000 level, which is the 200-day EMA. The problem is, if you look, the EMAs are all coming down. Now, obviously, we were oversold on the RSI, so we have to rebound a little bit. And then the MACD is starting to rise a little bit. We're definitely going to get a rebound. There's no doubt about that. And I don't know how high the rebound will go. I don't know if it'll be 42 or 46 or maybe even as high as 50,000. But I think what we're going to see is we're going to see it come back up a little bit, and then we're going to see a very slow sell-off. because we already had this sort of downward trend starting. Kind of came here, bounced a little bit, now we're down, we'll bounce a little bit, and then keep going down. Kind of how downtrends work. So that's what I see in Bitcoin. I think this is the start of a much longer, prolonged sell-off. Okay, let's talk about Ethereum real fast. This is ETH. Stockmo said he used today's drop to buy more ETH. He still sees ETH getting to $100,000 in the next 10 years. He also looked at the 1-month chart to show how ETH is still up over 10% on the month. Now, if you look at the chart from today's crash, you can see how ETH bounced right off of the 200-day EMA. And if I turn off the EMAs, you can see this blue upward trend line that ETH is still performing strong. It is still maintaining its upward momentum for now. So I'm not too concerned about the drop yet. I'm still considering opening a position on ETH, but since I missed the flash crash this morning, I still think ETH will continue to drop and eventually get back down to around this $2,200 level. If you've been following this channel for a few weeks, you know that I've been saying for weeks that I was waiting for ETH to drop below 2,500 and down to my ideal buying price of 2,200. A lot of you guys called me crazy, but here we are. I've said it before and I'll say it again. Patience will make you a millionaire in the market. Next up is AMC. This is AMC Movie Theaters. Keenan Grace reviewed AMC today and gave his thoughts on a potential short squeeze. Specifically, Keenan Grace looked at how the numbers on AMC are not adding up. He pointed to how AMC announced that they had 3.2 million individual shareholders who own about 80% of the 450 million shares outstanding. Now that was as of March 11th. Also, there are currently about 420 million shares in free float. Now, according to Ortex, 18.3% of AMC's free float is currently held in short positions. Now, what's fishy is that according to Intel, institutions currently own 121 million shares. Well, if retail traders own 80% of the 450 million shares outstanding, then retail traders own 360 million shares. And 360 million retail shares plus 121 million institutional shares equals 481 million shares. But the free float is only 420 million shares. So how can 481 million shares be held if the free float is only 420 million? This does not make sense. And that is what is leading a lot of Wall Street Bets apes to determine that the number of shares being shorted is actually much higher than the 18% of free float being reported by Ortex. However, I want to point out two key flaws in this thinking. The first is that AMC said 80% of shares were held by retail traders back on March 11th. It's been 2 months since then, and obviously a lot can change in 2 months. The other problem is that the last time the number of shares outstanding was reported was back on May 2nd. On May 2nd, AMC had 450 million shares outstanding. But on May 13th, they announced that they had just completed a 43 million share offering. So the true number of shares outstanding right now is actually 450 million plus 43 million, or 493 million. Now remember that when we take the 360 million shares the retail traders own and add the 121 million shares institutions own, we get 481 million shares total. And that makes perfect sense when you understand that there are actually 493 million shares outstanding, not 450 million shares outstanding. So basically, this whole conspiracy theory was the result of bad math and not understanding that the updated number of shares outstanding has not yet been released. In fact, by Keenan Grace's math, using the 450 million shares outstanding number, he said that there were between 38 million and 69 million shares that were unaccounted for. Well, the 43 million share offering that AMC just did last week accounts for those supposedly missing shares. Next up is CCIV, and this is a SPAC. They are merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. The merger has been pushed off until the third quarter of 2021. Stockmo went through Lucid's numbers to come up with a price target through 2026. Stockmo used the same slide from CCIV's investor presentation that Larry Jones used to come up with his numbers. Remember that CCIV is expecting to be profitable starting in 2024 and free cash flow positive starting in 2025. Stockmo compared those numbers to Tesla to help him determine his price prediction. Lucid's 2025 numbers match Tesla's 2018 numbers, and Lucid's 2026 numbers match Tesla's 2019 numbers. Now, StockMo just looked at the percentage gain, so I wanted to take it a step further to come up with some actual prices for you. I used the April 30th price from 2019 to best represent Tesla's 2018 annual numbers, and I used the April 30th price from 2020 to best represent Tesla's 2019 annual numbers. So long story short, using market cap instead of a percentage gain, CCIV would have a year-end 2025 price target of $187 and a 2026 year-end price target of $561. So if CCIV does in fact hit their numbers and get somewhat close to the PE ratios that Tesla gets, then you could potentially 30 times your money in a little over 5 years. In other words, if you invested $35,000 into CCIV today, you could potentially turn that into $1 million in just over 5 years. StockMo did stress that the biggest payouts won't come for another 5 to 6 years, so you really need to keep this as a long-term hold. Next up is COIN. This is Coinbase. This is a platform used to trade cryptocurrencies. Chris Zane said that he used today's cryptocurrency crash as an opportunity to buy COIN. COIN dropped down to almost $200 on Wednesday. That is a huge dip from where COIN had been trading. Next up is FTX. This is FedEx. Chris Zane made the decision to replace T with FedEx. Chris Zane sold his AT&T stock yesterday after they cut their dividend. Today, he made the decision to buy FTX as a replacement for T in his dividend portfolio. Next up is SQ. This is Square. Chris Zane used today's drop to buy SQ under $200. Since SQ is now below the 200-day EMA, I think you might be able to buy SQ for around $180 if you are patient. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what you think about me doing some sponsored content, and if you guys want to get some free stocks, sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $1,850. They're also going to give me 1 free stock, so it helps you out and also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.